Hello, traders. This is Leslie Juflis with Trading Live Online. And I'd like to thank you for coming to my recent presentations. And I've gotten questions on exactly what is a butterfly pattern. So I thought I'd do a quick tutorial of this and let you know where this pattern came from. Larry Pesavento named this pattern, the butterfly pattern, in 1992 when he was trading one day with a trader by the name of Bryce Gilmore, who had developed in 1988 his wave trader program that used Fibonacci analysis, sacred geometry. And this pattern formed that one day. And Larry saw it and he said, wow, that looks like a butterfly. And if you look at it, it does look like butterfly wings. And so that's how this pattern got its name. Now, this pattern is a fantastic pattern to learn. This pattern is known as a reversal pattern. And you can see here that from this particular pattern on the S&P 500, this got a strong reversal to the downside. This pattern was also showing on the Dow Jones Industrials on a daily pattern as well. And so generally when you start to see this pattern form on multiple indexes and across multiple stocks, you really want to pay attention to it. The pattern is formed, it starts with an X point. That's the start of a swing. In this particular case, the swing is to the downside, and this is where the A, the B, the C, and the D legs start to form. Now with the butterfly pattern, the D completion is always going to extend beyond X. When the A, B, C, D is contained within that X to A swing, it is called a Gartley pattern. But whenever the D extends beyond it, then it's a butterfly pattern. These patterns have the potential for very explosive moves, as you can see here. They don't always get this kind of move. Sometimes we'll see a retracement. Sometimes it'll be a retracement to like a 382. It's still very, very tradable. Sometimes a deeper retracement to a 786, and then before moving back to the upside. However, the traders always want to be prepared for the opportunity of this type of a move. Another benefit of this pattern is that we can find where these completion areas are in advance. As an example, where this red arrow is, this is where we first started identifying this pattern back in December on my weekly market setups video. And this video, as I mentioned, is one where we do our trade preparation for the upcoming week, and we look at the indexes, and then we scale down from there to different ETFs and stocks in different markets. Now, this pink line here, you might be wondering what that is. Well, after the market made this initial move to the downside, I marked this in prior to the price retracing back up. And I told our subscribers to look for resistance coming into the 50% of this long candle. So this was expected resistance, and the expectation was for at least another leg down. In this particular case, the leg was very extended. One other quick thing to note with these patterns, when you start to get these very powerful moves, you can do a fib extension using the start of the A up to the D and then extending your fib ratios of 127 and 1618. This particular pattern saw a move just beyond the 1618 and then back up through there. And this pattern, of course, also forms in reverse as a buy pattern. So I hope you found this tutorial helpful, and I will be sending out a special package on my courses for you. I'm going to bundle some of the courses together. If you're interested in learning the structures of these patterns, I have some very in-depth courses that take you from the very beginning, walk you through the structures, and then all the way through how to develop your trade plan, trade management, and risk, and some extra materials with it. So please look for that. And I'm also going to include in this email, I'm going to include the link to this week's weekly market setup so you can get an idea of what we look at each week. Well, best wishes for successful trading. Please feel free to email me. Once again, this is Leslie Chuflis with Trading Live Online.